We're gonna do some crowd work for the first 5 minutes. Where's everybody from? Cool. Well, thanks for the introduction, Marty. As a preface, I'd like for these to be interactive. So if you have something to say, just use the time-honored tradition of raising your hand, and we'll have a chat about it. But my name is Dan Marcus. For those that don't know me in this room, I aspire to be somebody that needs no introduction, but I'll do a quick minute. So I've spent my entire career in sports and entertainment. Mostly these days, I'm an attorney representing sports clients that include an NBA agency, entertainment clients that include TV shows like Jeopardy. Outside of that, I teach in the sports business program at NYU. In a prior life, I developed and sold Pete Rose's gambling podcast, which is like a weird and fun claim to fame. And now I'm your master of ceremonies. So I'll get out of the way and let these guys introduce themselves in the order that they're sitting closest to furthest from me. And I'll start with Devin Kelly.
Thank you, Dan. Hi, my name is Devin Kelly. I'm the co-founder and managing director of Steady Capital. We are a kind of 360 partnership as a service and capital raising entity for companies looking to kind of break into the sports world, whether that be through marketing, sales, finding investors, athlete ambassadors, and the like. Quick background on me: sports has kind of been the theme of my life. My probably biggest athletic accomplishment is not even my own. I played high school football with Russell Wilson. So that was really exciting for me to see him take off in his career. So any chance I get the opportunity to say that, I do. I played college lacrosse. I worked at IMG in the sports marketing side, ended up at a sports-focused investment bank. So kind of, looking back, the dots all connect. And so had a lot of different experience across the large industry, and to see what the industry is doing now is really dynamic and exciting. And so happy to be here and tell you a bit more about that.
Where did you play college lacrosse?
I played at Yale University.
Boo. I don't know. No, go ahead.
Hey, my name is Vasu Kulkarni. Yeah, push it. Okay. Hello, there we go. My name is Vasu Kulkarni. I run a fund called Courtside Ventures. We've been at it for about 9 years now. We were the first institutional fund focused on sports back in 2016. Former founder, I started a sports analytics software company out of my dorm room at Penn, which this week is not a good place to be from. But I was a walk-on basketball player there, got some minutes on JV. So that's my athletic claim to fame, is coming in from India as a 5'9", 135-pound soaking wet kid, getting to play at the Palestra, which is the greatest place to play college basketball.
It sure is.
Yeah. So ran that company for about 9 years here in New York, sold it to private equity back in 2017, and then started Courtside along with two of my partners. And today we focus on sports, gaming, and collectibles. Those are the three areas of focus for us. And most of our capital has come from athletes and team owners. So very strategic group of people that we've been able to have a lot of fun with over the last decade.
I heard there was a guy that used to play basketball that just became an investor.
Yeah, yes, the greatest moment of my life was getting to close the GOAT. So Michael is now an LP in our fund as of a couple of weeks ago, actually. So it's all downhill from here, unfortunately.
And last but not least, Stephen.
Hey guys, how's it going?
Oh, there we go. Nice to meet you, Stephen Armitage, founder of Intrepid Sports Group. We're the holder of IP from World Team Tennis, which is an emerging league that is going to be restarted. Started in 1973 by Billie Jean King. Kind of went through a few iterations on the ups and downs of team tennis within the sport. But with the rise of emerging leagues, as these guys are in deep, we're excited to bring it back starting in next year. A little bit of history on me: played college tennis at Duke, put on tour a little bit, oversaw college tennis for the USTA. Was a founding member at a tech company called UTR that was pretty deep into the analytics and gaming side, and then moved on to this new venture here. So thanks for having me today.
And Stephen just had a daughter a couple months ago. So in 15 years, worthy of a round of applause. Okay,
Thank you.
Good for you. Hooray, procreation. In 15 years, we'll have the next big female tennis player. So I wanted to start like this. We're in New York, and I wanted to start with a New York-centric question, which is there and has there ever been an employee that's worth $780 million? Let me ask a more serious question about this. So zooming out, clearly all of you guys, based upon what you do, believe that sports is an investable asset class. But we've seen more institutions get involved in it, especially in, like, let's say the last 4 or 5 years. Why is that, and why to you is it an investable asset class? And Devin, I'll start with you, and then we can mix it up.
Sure. One, I think it's not correlated with the market. So I think that's an interesting thing to play. I think also it still is a trophy asset. So I think a lot of people like to say, I'm an owner of a team. It doesn't matter if it's 0.001% of it or the full stake. They get to talk at cocktail parties and say those things. There's also a lot of derivative industries that are generated with sports as kind of the genesis of that, whether it be technology or media or merchandising or NFTs or, what have you. So I think if you're in and you're at the engine of all of that, it's a good place to be where you can think about investing in other kind of, ripples around that asset, whether it be a league or a team or whatnot. So I think it's a mix of those things.
Yeah, I don't disagree with any of that. I think sports is way broader than what most people ever thought of it. And when I was running my company, I couldn't raise a $1 in venture capital money for 10 years. And it was because every VC I spoke to said sports isn't big enough. And they all thought sports just meant things that you sell to teams or athletes. And sports, as I said, way broader. It's the world of collectibles, the world of gaming, fitness, wellness, recovery, longevity. You put all of that into under the umbrella of sports, and all of a sudden there are multiple billion-dollar opportunities out there. I think the other part is the valuations of these teams have just continued to get so big that ultimately, like, you're pricing out most people. Like, you can't really buy 1% of a team anymore unless you're willing to put, $100 million down. And now you put that money down, you get basically nothing for it. Like, there are really no perks to team ownership other than to tell your buddies at a cocktail party that you've got 1% and you might get a ring one day. And so I think that's basically the rise of institutional capital, is to solve this problem where there is no other form of buying in or getting liquidity out of teams to individuals. You need a sovereign wealth fund. You need a large patient pool of capital that's willing to come in and buy a 5% stake in a team, because it's just not conducive for regular people to do that anymore. And you don't get much for it in return.
I'm sorry, how illiquid is this investment? Like, for how long? Like, the average team ownership goes for how long, basically?
So, I mean, when we started our firm 10 years ago, we said we won't invest in any teams or leagues, primarily because we didn't think that the cycle made sense. Like, a 10-year cycle for a venture fund is already pretty long. And we thought, a new league, for example, would take far more than 10 years. The NBA took 30, 40 years to get to being a real behemoth. But today what you're seeing is a lot of new leagues popping up there where in Europe, for example, there's soccer leagues. There's 6-on-6 soccer. You can't kick the ball backwards when you're behind midfield. So you're creating action all the time. And every team is run by an influencer that has more than 20 or 30 million followers on Instagram or Twitter. And so what you're doing is, on day one, you're creating an audience that is there. You don't have to build up a brand. Literally, these influencers' fans are coming to watch their team play. And so, those are the types of things that are happening that greatly decrease the time frame required to get to liquidity and to have a positive outcome.
But franchise turnover in the older leagues is like every 20 or 30 or 40 years. I mean,
except for now, I think with the private equity guys coming in, we've seen people hold an investment stake for 2 years and cash out with 40, 50, 70% returns because some private equity firm wants to buy them out.
So I think, Marty, that's a good segue, and I want to kick it to you, Stephen, for this question, which is the sentiment that we've heard very quickly and very early on. By the way, is there any way to fix this mic? That's a thing. Okay, no big deal. Is that it seems like we're at the top of the market as far as traditional sports and traditional sports organizations. So where are there opportunities outside of what people think in terms of team ownership, or other upstart leagues or other sort of areas?
Yeah, well, obviously, I'm a believer in the upstart league, and in terms of what you're looking for with the ability to fill a niche, I think exactly what Vasu just mentioned. Whether it's changing rules, changing formats, changing schedules, whether it's us in tennis or whether it's, TVL in golf or the guys in Major League Pickleball, for example, the ability to cut athletes in on some of the equity of the company, just gives a little bit more of a reason for everyone to be involved. In addition to what Vasu was saying, and I was talking to Billie Jean King last night over dinner, from when they started in the 70s to where we are now, there's all new types of emerging media, all new types of revenue streams, such as gaming, collectibles, merchandise. I think that's kind of where we see new opportunity with that. And, also kind of to dovetail on what everyone else said here, it's just very difficult to get access at the higher leagues, but at the qualitative and, hospitality opportunities to have, the sports ownership, I just think that this is the emerging leagues find an access point and opening for pretty much everyone involved.
So as a side note, you could tell a lot about a person by the nonchalance of their name drops. And that was so smooth. I was at dinner with Billie Jean King last night. Oh, never heard of her. Anyway, Devin, I saw you going for the mic, so go ahead.
Yeah, so we actually looked at and invested in a league called Unrivaled. And so it's a women's 3-on-3 basketball league starting up here, and it's going to tip off January 17th. Check your local listings. I guess it's going to be TNT, but to that point, other means of streaming, OTT, and all that. But there's a lot of interesting things happening here, and it's a lot of confluence of a lot of things we've already mentioned. One, it's driven by the star power, so it's the top 30 women in the WNBA that are coming in, and they're doing it in a different, fast-paced format. They're removing, 40% of the players from the court. It's quick, it's fast moving. It's, very much about how consumers are consuming sports these days. They want highlights, they want quick bits, and they don't really want to sit through a full game, that especially on the younger side. The access point obviously is interesting as well. It's just more affordable to invest in these leagues, and there's probably more of a growth ramp and accelerated, value creation for someone that comes in a little bit earlier. It's a really interesting time, I think, for leagues to come around like that. And one more, interesting dynamic there too, is that a key thing for this league was to ensure that the women were going to be the highest paid out of any league for women's sports in the States, which they've achieved. But also, the longer these women play in the league, the more equity they earn into the league itself. And you can see interesting things like that with new upstart leagues where they're untethered from infrastructure and legacy elements that the bigger leagues have to contend with. And I think you're going to see a lot of new things come up like that across, regular, traditional sports like basketball, but also new ones such as pickleball.
So, Vasu, I'm going to ask you a different version of a similar question, rather. So, courtside's been around for a while, and you've been at this for a little bit. But the aperture of the things that you guys invest in has obviously evolved over time to now you're doing something really for a couple very specific things. Can you explain that trajectory and why you're focusing on what you're focusing on now as opposed to what you were focusing on earlier?
Yeah, I think part of it was just it was learning. It was trying to understand where the opportunities lie. At the end of the day, like, we have to find alpha where generalist VCs aren't looking. And so for us in Fund One, that was just we just said sports because nobody wanted to do sports. Over the past 7-8 years, we've seen multiple firms get into sports, either because a partner at a generalist fund really likes sports or because there's 4 or 5 other early stage venture funds that have popped up. And so early on, it was sports betting and fantasy, especially globally. So in 2019, we went to Brazil early, expecting Brazil would legalize sports betting at some point. And we bet on the DraftKings or FanDuel daily fantasy player out there. Brazil legalized sports betting this year. We're getting a sports betting license. Hopefully we can build a big sports book out there. But we also then in Fund 2 started to look at gaming as an important part of this ecosystem. And we felt emerging markets in particular were really important for gaming because our overall thesis is that everybody needs some sort of release every day. And gaming is the cheapest form of entertainment in the world. You could take your kids to the movies here in the US. You'll spend $100 for 2 hours of entertainment. You buy them a video game for $50 and they're entertained for the next 12 months and they won't bug you, right? And especially when you look at places like India, Africa, Brazil, you've got, in India, for example, you have 600 million monthly smartphone users, the cheapest data in the world. Literally, it costs cents per gigabyte. And 400 million of those people play games every month on their phone because it is the cheapest form of entertainment. And so we went to India and bet on a company that allowed you to play simple games like Candy Crush for real money. right? So I wager $1, you wager $1. We play Candy Crush on our phones. I win, I get $1.80, and the house keeps 10 cents or 20 cents or 10% as the vig. Last year, that company did $3.5 billion in wagers in India. It's like 350 million in revenue, 80 million in EBITDA, and just growing like wildfire. And so we started to see how gaming was becoming a really important part of the global ecosystem. And then the last place where we went was collectibles. So we started off like we were the first money in StockX, the sneaker marketplace, and we started to see.
Hold on. I'm going to interrupt you. You got to show everybody your shoes. So he practices what he preaches.
There we go.
And
I
there
did buy
you
these
go.
on StockX, by the way. So I'm just funneling more money back into our portfolio and to our LPs. So, but we saw sneakers go from a utility, something you wear on your feet, into a hobby, into an asset class that you started to see the unbundling of eBay happening. Everything for 20 years on the internet had happened on eBay when it came to collectibles. And as these items started to become more and more valuable, eBay was no longer the right place to buy and sell them. You needed better buyer and seller tools. You needed authentication. You needed insurance, logistics, and shipping. And so we've tried to now replicate the StockX story across multiple asset classes. And we've done the StockX for art, for watches, for comic books and Pokemon cards. We're building what we think is the next generation auction house right now for sports memorabilia in-house. So I'm just very long collectibles. I think the overarching theme across our fund has been the sense of community. And I always say as a 30-something-year-old, you move to New York, how are you going to make friends unless you're a very gregarious person that goes out? I don't go out. I'm an introvert. Every person I know today is someone I've either met on the basketball court hooping with them or someone that I met through the collecting world here in New York. And those are my friends. The girl I'm dating, I met because she was selling watches at a watch store that I was shopping at. And so I'm just very, very high on collectibles.
I won't make you tell the whole story, but if you want, we should connect with Vasu offline about that. So
I have another question.
Go ahead.
So you're starting an auction house actually brings a whole bunch of other questions because are you then competing with auction houses who also do collectibles? I mean, there's all the art auction houses.
Sotheby's,
Yeah. I mean, my general belief is that the old school auction houses have failed the items that bring through them. You look at Christie, Sotheby's, Phillips, the big boys. They're asset heavy companies that have real estate in every city in the world. They have thousands of employees, and most of their auctions are a static homepage or a static web page on their website and pretty shitty technology. The old school idea of going in for an evening sale and holding up a paddle, like that's not what my generation wants to do. And 60% of the bids, even at Sotheby's, Christie's, and Phillips today, are happening around the world online. And so there needs to be a digitally native auction house with storytelling at its forefront. Because at the end of the day, like most of these items that come up for auction have no intrinsic value in and of themselves. Like a game-worn Michael Jordan jersey is a $5 piece of cloth made in China. But you tell the story of what Michael did in that, and these things are selling for $10 million. I mean, just this week, we saw the highest price ever paid for movie memorabilia. The red scarlet slippers from The Wizard of Oz sold for $32 million for a pair of shoes, right? And so we're just in the infancy of this. We've only seen sports memorabilia break 8 figures for the first time last year. And so in our opinion, we are at the very, very beginning of it, which is why we want to build something in-house.
So in other words, nostalgia is a real business model.
Not a doubt.
Okay, I want to actually circle back around because we talked about upstart leagues, and the one thing we didn't actually figure out there is if you're an upstart league, how are you going to make money? What is the plan? Is it the traditional paradigm of media rights, or is it something else? So Stephen being the person who is either trying to, depending on how you would characterize it, revive a league or start a new one. What's the play there?
Well, I think that both these guys mentioned it earlier. I mean, you have to look at, really leveraging technology and new media as kind of putting that at the forefront. So whether it's unrivaled with, let's just call it a 360 operation with what they're doing with TNT and Bleacher Report and House of Highlights, or whether it's, Kings League or the other soccer leagues where it's, constantly trying to look to influencers and audience that you're going to start out with. I mean, for us, it's a combination of both. It's the fact that this IP has a 50-year history that we're going to rebuild and bring back with great people like Billie Jean King, but also, looking towards what, is really driving in my case, tennis, which is gambling. and, hospitality. And so I think that, as I mentioned, as a sports owner and the qualitative benefits of, owning a team and being able to host people. And I think it's one step more from the cocktail party of saying, hey, I own this team is, come to watch my team. And so I think that that is something that, we've seen from the folks that we're partners with. And then at my previous company, I think that the online gambling world is just something that is truly driving, I would say, international sports specifically, but certainly tennis, and the fact that, I think it's a $2 trillion turnover each year on tennis betting, and something that is going to continue to grow as, more content, more matches, and more people get access towards gambling. So, really a lot of new revenue opportunities through mostly technology that we feel like are there for the taking.
So we had a question here.
I have a quick one. Did you, when you bought WTA, or sorry, the World Team Tennis, when you bought that, was it like the brand had expired or something?
Yeah, I mean, look, for me, I was in a lucky position. The fact that this expired after COVID, and the guys it was a single entity model that went wrong, and so that's actually a risk when it comes to these, emerging leagues. Is that usually there's a single backer that's holding most of the teams, looking to build value and then sell off, each.
So you had a brand and you had an opportunity to get it at a discount.
Totally, yeah, and so I think that was the value for us, and as a discount buyer, I think that
There's
was
a nostalgia piece to it also, right?
Yeah, they actually played 5 sets for it and he won. So that's the real story. Steven, I saw you had a question.
Market as an opportunity to set up or to a market, a trading market.
We did some of that back in 21. Every single one of those was a big fat zero. I think with crypto coming back, like there's a chance some of the early NFT projects start to see some life again. But I think NFTs, if they come back, will probably take a different form than what we saw the mad gold rush over 21, 22, where it was like every day somebody's creating a new project, 10,000 mints. And like at the end of the day, when you think about collectibles, the reason watches, art, all of these things are collectible, I think, is because they have to withstand the test of time. And with what the tech community tried to do with NFTs was just shortcut all of that and say, this is a collectible, buy it. And that's never a recipe for success. During the pandemic, I got really into ticket stubs because I saw everybody else buying trading cards, and like a Jordan rookie card that went from $10,000 on eBay over the course of 1 year shot up to 750 grand. And if you look at the volume trading, the highest volume was at 100 grand. So for years at 10,000, nobody wanted to buy these cards. They hit 100 grand. All of a sudden there's a mad rush because people think, oh my God, this is an asset class. Then they peak at 750 and now they're back. They've lost 60% of their value. But I looked at ticket stubs at that time. I said, ticket stubs are far rare. You look at Jordan's debut for the Bulls, there might be 5 ticket stubs that anyone held onto from back then. And I own one of them now. And so to me, like, there's a much better story with things that were never meant to be collectible at all. And most of them get lost in time. And that's why 100 years later, 50 years later, these things are worth crazy amounts of money. With NFTs, my problem is they're all digital, they're all on chain. They really don't ever get lost unless you lose your crypto wallet. And so the 10,000 that exist, there will always be 10,000 of those, even 100 years from now. To me, that doesn't make something very valuable.
So if you're interested in ticket stubs, by the way, I have a whole shoebox of ticket stubs of shitty Jets games that I've been to that I'm happy to sell you. Go ahead.
Can't hear.
Sorry, we needed to give you a mic, and that's on me. I point the thumb, not.
One of the toy companies went into the NFT market because there was something I was doing that we were looking at that possibility. It was in the toy business, Mexico situation that we wanted to bring here into the United States.
Yeah.
I didn't go into it because we stopped, but I don't know whether or not that's to what extent they're going to expand or not.
I mean, NFTs continue to exist. Like the old projects are still like hovering in like the 30, 50, $100,000 range for an NFT for like the most important projects. I think NFTs serve a purpose, right? So to me, the best use case for an NFT was as a certificate of authenticity. Like every collectible I buy, whether it's art, watches, what have you, it should come with an NFT that's a digital certificate of authenticity.
unfortunately, the tech world decided to take it in a whole different direction, try to make money off of it as quickly as they could.
Is this question about NFTs?
No,
Okay, thank God.
we did that in 2017, it's old. So, so our question is, market segmentation, right? You're talking about like, 3-person basketball, 6-person soccer. Are you finding that in the more traditional leagues, traditional sports, that you're starting to segment it more? Because it seems like to me, go to Greenwich High School in Greenwich, Connecticut, they're playing sports that the average person doesn't play, lacrosse, girls rugby, right? Stuff like that. So do you think that's the direction of the market? Is this far more segmented?
I think-
And how much money the audience has to spend, or?
I think we should let the former lacrosse player take that.
Well, it's interesting. Lacrosse is, a Greenwich, Connecticut sport, let's call it. But, for the Olympics, there's going to be lacrosse sixes, right? So it's more accessible and all that. So I think you're seeing some dynamicism in a lot of these sports that are going to make it more democratized. Lacrosse also is an example. It's now spread across the country. But at the same time, you look at the PLL, the Premier Lacrosse League, it's not making money. It's still kind of a niche thing. So, but also too, you can think about the WNBA haven't taken as long time as it did. Now, basketball is a traditional sport, but it wasn't really, democratized through women playing it for a long time. But it's taken 25 years, and now it's finally coming around. So I think time is going to be a factor here. You can't really force cultural adoption. That's what I would say, and the money falls from that.
Anybody else want to take this?
Yeah, I mean, I'll just say one more
Tennis is a
thing.
great
I'll just say one more thing. The fact that, look, I think that you need to create a differentiated product. And so I think that going forward, for exactly the same reasons that, we spoke about here, you're trying to create a structure that can provide more excitement, that can provide, shorter formats that fit new media, that provide, higher outputs for potential data rights. Like, I think that those are what you're looking for as you are creating new leagues to really leverage the revenue streams that come
A
along.
great example, racket sports is kind of tennis is an upper tier. You've got pickleball in the lower tier, and then you've got padel.
Padel, yeah, sure. And I think that again, it's great points for what you're bringing up. And obviously, we were talking a little bit earlier about some of the real estate plays within Padel and pickleball. But racket sports in general, I think are moving at a really high trajectory.
So we had a question from back here. Sir, tell us your name and where you're from. I'm just kidding. Go ahead.
Okay, great. Thank you. I couldn't agree more that sports is definitely something that needs to be exploited on many levels, private capital, public capital. And you're seeing that whole transformation going on right now. But one of the questions I have is specifically to the collectibles is that, and I think it's ingenious that you're doing ticket stubs, because nobody gets tickets anymore to events. You get a paper, you get something that's paper, or you do everything over your phone. So I think it's ingenious that you're doing those ticket stubs, because it's something that doesn't exist anymore. It'll become rarer and rarer. And I like that facet of it. But the validation, like how did, there's a lot of fraud in a lot of the collectibles markets, huge fraud, Ted Williams signatures, Mickey Mantle signatures, not even going down the rabbit hole. There's a lot of fraud. It's idle guys who do it for a living. Right. That's what they do. And they get away with it. And they're guys that'll look at it and be like, I never signed this. Right. And be like, yeah, I paid. It said you signed it. I never signed this, kid. Right. So how do you prevent that? But when it comes to the collectibles and all the ancillary things around sports, there's a boom bust cycle to it. Collectibles specifically, they're in vogue at one point. They're very hot. It's like the Tulip Bowl, right? It's great at one point, and at one point everybody gets away from it, and then you have something that's nothing. And the NFTs were an example of that. How do you provide that quality and that boom bust? Being in venture capital.
Yeah.
Sorry.
So on the authentication side, there's a handful of companies that, are the experts in that. Now, I'm sure stuff slips by them too, because at the end of the day, it's a human that's looking at a signature. They're looking at a card. Like PSA, for example, Collectors Universe, they were a public company, about $1 billion market cap. My classmate, Nat Turner, actually from Penn, took them private a couple of years ago, massive trading card collector, and he's sort of rebuilding PSA with technology at its forefront right now. Like all my ticket stubs, I gave to Nat. Nat took them to their authentication spot in LA. A couple months later, they all come back to me slabbed, graded, with the PSA seal of approval on them. So you can't really tamper with them unless I break open the acrylic, right? So historically, that's how everyone in the industry has agreed that if PSA or Beckett or one of the three major grading agencies says something's good, it's good. Now, it's possible for sure that they've authenticated things that were fraudulent. And at a certain point, like there's always going to be, 1% or 2% of things that probably slip through the cracks. I think over time, machine learning, computer vision, AI will make this better, because if we can feed a machine learning system 100,000 examples of Michael Jordan's official signature in the future, that should be a computer vision problem, not a human problem, where you take a picture of something, it'll tell you whether or not that was an actual Michael signature. So we're spending a lot of time looking at companies in that space that are working on authentication. The boom bust cycles, I think at the end of the day, like anything, including the general stock market out there, there's always ups and downs. But what I have seen is that the premier items, the marquee items, they can, just like the big 5 sports leagues, they always are up and to the right. Even in the worst economic times, you look at results at Christie Sotheby's, the Picassos, the Monets, the FB Journes when it comes to watches, like they're always setting records every single time. And to me, that's the rich remain rich. And even when things were not going so well, the last 4 or 5 years in this country, seen the biggest rise of wealth amongst the top, 0.1%. Those are the guys who are buying these things anyway. So I think where our companies that we deal with have to think about the cycle is what happens to the middle of the market, because the high end of the market will continue to rip, but it's the chunk in the middle where those prices may come down. But what we've seen with our marketplaces is as prices come down in the secondary market, the volume starts to pick back up, because all of those hobbyists that really want to buy these items, they come back into the market when prices have come down, and it's the speculators who leave. There's a lot of people who enter markets when things are hot because they think there's a quick buck to be made, and then when things go south, they exit stage left real quick. But it's the guys who really love cards and memorabilia and watches and art who stick around no matter what. And so it's just a sort of a delicate balance there. And I think some of this lies on the brands themselves to protect themselves in the secondary markets. I know of watch brands that when things are not going well, will come in and use balance sheet capital to buy up all the stock on the secondary market and auctions so that the value of their brand doesn't come down. And to me, like it takes a special kind of CEO at those brands to understand what's happening in the market and say, we're going to go clean up the secondary market and not let our items sell for 60-70% under retail.
So I saw a question from Pete Thurlow over here. Considering he's hosting us, I figured I'd let him get it in.
So in the marketplace, in this family office investor network that Marty is an expert at, and we're all pretty active in, you see a lot more former players, current players that are making just so much money that are getting to their own family office. Serena Williams is the more recent, but I recently met with Steve Young, not Steve Young, I met with BYU. I said, you need to get Steve Young in the mix of many others. I think Aaron Rodgers should focus more on being a quarterback, but I think he's involved as well.
Yeah, I'd agree.
I'm a Jets fan too, suffering. But I guess the basic question is, you see a lot more of that where Kevin Durant, LeBron, others are very big. Chris Paul, I think, and others. It's just going to be increasing category.
So what was the question?
So the question, I guess you see more of it with Serena and tennis and just throughout. There's just so much money where they're going to be setting up their own investment advisory groups and doing more maybe non-sports related investment.
So how active are athletes becoming opposed to? I mean, they've been passive in the past, but then you look at Kevin Durant and now Serena, people like that who have become remarkably active.
Michael, do any other investing?
Yes, but not a ton. I think it's probably pretty hard to move the needle for Michael Jordan when you're getting a $200 million royalty check from Nike every year. It's like, and I mean, I try to say this to a lot of the marquee athletes that give us money. It's like, look, you're never going to make more money than you are doing what you're doing on the floor, right? Like focus on that for the 15 years that you have, and venture things like this should just be one small piece of their asset allocation. And or if they truly have an interest in it and they want to do this post their playing, it's about setting themselves up for a career after sports. But for the most part, I think the best athletes are probably ones who've put money into venture funds and then get deal flow from those funds, and then they're reinvesting directly into the winners as opposed to trying to do venture themselves. Because I mean, it's portfolio approach. If all you're going to do is a couple deals a year and you're not doing this for a living, the chances that you're going to pick the best winners slim to none. I mean, we do this for a living. We see 5,000 deals a year and we pick 8 of them, and we're still wrong 90% of the time. It's only our 10% of winners that generate all of our returns. And so if that's, not to toot our own horn, but like we have our pick of the litter when it comes to sports deals because we've built a good brand. And if we're still wrong 80 to 90% of the time, what chance do you have picking single companies here and there? It's just better to have a portfolio.
So Steven, I saw you wanted to jump in on this.
No, I will say just from my experience, and my wife played on the WTA tour for 15 years. Like, I would say that pretty much every one of the athletes that I know from tennis, and we had a lot of overlap with the golfers, would like to get involved in some way. I think that Vasu made the correct, would give the correct advice, which is to go through professionals to do it. But I think there's a secondary element there, which is just each of them have brands now, whether it's an NIL deal that's for collegiate athletes or someone at Serena's scale, where you can then accelerate by connection anything that you're going to invest in or invest, as with a third party in between. So I think that that's where, it's going to become a lot more, I would say, professionalized going forward rather than what it was maybe 10, 15 years ago with Steve Young. But I think that there's a definite desire for pretty much all the athletes that I know that have been trying to cross the chasm in that way.
So for everyone with questions as a preface, and by the way, I won't cut you off, Devin. Thank you for the questions. I've seen all of them. I know all of them, so they're in the queue. Go ahead.
We have somebody from online also.
Absolutely.
I'll just add to that. We get the privilege of seeing a lot of athletes, former, who have an interesting cash position, and they kind of don't know what to do with it. And they have this competitive drive, and where do I channel all that energy? We've kind of seen it go into two camps. One is, and usually these are the guys who are more close to their careers ending. I want to invest in what I know, and what I know is sports and health and wellness and CPG and stuff like that, or I want to be, developing my own self as a brand. What does that mean going forward? So we see a lot of that, and that's easy and it's fun and it's relatable, and you can buy the products online, and that's great. Some of the, I guess, more seasoned athletes who have kind of gone from playing to initial investments to what makes sense. I've seen an amazing maturation. I mean, someone mentioned Steve Young. I was at an event where the head of John Elway's family office, he's investing in, without divulging anything, industrial companies and data centers and stuff like that.
And shitty quarterbacks, yeah.
Well, yeah, and that too. But even then, moving away from football and more into real businesses that don't necessarily have a direct sports tie. So they have all this kind of legacy brand and connectivity and sources of capital, and also advisors who can come in, and they've been around the block now a bit, so they can be more discerning as to who's coming in and providing real meaningful advice to them, and who's seen something in the financial markets or investments that could come to bear with something real. So I think we're definitely seeing a maturation in the sophistication around these athletes, how they're investing, what they're investing in, and it's been interesting.
Okay,
Dan, we have a question from the audience.
Sure.
You want
Go
to
ahead.
speak up?
I didn't know if this was a live question or a written question.
Suzanne.
No, it's not right. Hi, it's Suzanne Murphy. And I don't know how to turn my video back on, but
It's okay, Suzanne, we believe you exist.
You all know who I am. I wanted to add to the conversation as much as ask a question. I mean, I think some of what you guys are saying is true with the more sophisticated athletes, but if you listen to Shaquille O'Neal, he talks a lot about the fact that a lot of athletes end up getting screwed over by trying to do these things on their own, and even by picking funds on their own, and are doing things like selling their brands to companies that then manage them for them and outsourcing their family office. I mean, I think Serena Williams is an interesting case because of who her husband is and his level of wealth and probably what they're able to set up as a family office. But a lot of these guys don't have the sophistication to know who even to hire. And so often I think they're better off working with OCIOs and people like that who can pick people like you, but they're not capable of picking people like you. And it's hurt a lot of them over the years.
So what's the question?
Just the thoughts on that, I guess.
You agree?
It depends, I think, is the answer. I mean, there's a firm called Mastery, and they are kind of some real venture investors, brand people, and they've partnered with basketball players that come in at the GP level. And I think, some of these athletes, they know what they don't know. And so in so doing, I think that's exactly right. They need to find the people who have walked a little bit of the path ahead of them. I don't think you're wrong also in that I think a lot of these guys, they get out and they don't know where to put their dollars. And I think they suffer as a result of that. So it totally depends. And it also comes down to team, who do you surround yourself with? So that's immensely important.
And they have to really, I mean, look at Derek Coleman, right? You have to really focus on the business.
Yeah. Well,
Just because you're wealthy doesn't mean you have to be a savior.
Shaq's an LP in our fund, so I have to agree with whatever he says. And I definitely don't want to get in a fight with Shaq. But I mean, look,
Well,
he's probably
Shaq
a good
might have come
example.
into Shaq might have come into you through the guy who runs his money. He may have come in
100%. And
directly,
that was my point is it's not
Yeah.
Shaq making the decisions the same
Right.
way. It's not Michael Jordan making the decision. Like it's cool to get to meet these people after the fact, but it's because they have good people around them that are putting their money to work and not in one fund. They're probably putting Shaq into 10 different funds. So even within LP allocation dollars, it's diversified. And then within our fund, it's diversified across 30 more investments. And to me, like, I'm not going to make Shaq rich. Shaq's already rich. I think it's about preserving wealth at that point. It's not about, making them much more.
100%. And by the way, it's a lot more than 10 funds because the same guy who runs my money runs his.
Oh, awesome. Maybe you're an LP in our fund. Who knows?
I don't know.
Do you guys remember what I said about the nonchalance of name dropping? So I'm going to use this as a segue. Chris Ansie's been very patient. Chris.
And you can just say my name. Just to switch gears for a quick second. I'm working with a company that's looking to gamify advertising for sports. And the premise is based on the derivative of the games have become more popular than the games. So you spoke earlier about the younger generations. Growing up a Giant fan, we went to the games, we watched the games. These younger kids are watching the Red Zone or they're watching their, fantasy teams or what have you. So what he's looking to do is gamify the advertising because he's getting complaints. They're getting complaints from the advertisers that there's not a lot of engagement. I'm just wondering if you guys have heard of anything similar to that.
We see a lot of gamification things in general. I don't know that I've ever seen anything specifically to gamify advertising. So that might be novel. Have them send me a deck.
Okay, walking around to other audience questions. Stephen, do you still have a question or no? Or do we answer it?
I'll make a comment to you for you to think about as an investment opportunity. Go back to the NFTs. Jay Leno has a host of cars, a portfolio of cars. Take an NFT, create an NFT on those cars, create a platform or a trading situation where you can invest in a portion of his cars through an NFT. More importantly, now you liquefy his or monetize his asset. And he keeps 51% of it. He never sells the cars. But you can trade that NFT on a market.
I'm smiling because we incubated this exact company back in 2021. We built a platform, and the first asset that I tried to do this with was Michael Jordan's house in Chicago, the one that finally sold this year. And so I went to Michael's people and I said, hey, I want to fractionalize Michael's house. We'll put it on this platform. We'll tokenize it. There'll be an NFT and you can buy fractional shares in it. They said, great. As long as you don't monetize his name or his house in any way. I said, what does that mean? I was like, can I rent it out for a bachelor party? Like, nope. Can't sell a single item inside. And I spoke to his real estate agent there, and this poor woman, she was like, please, for the love of God, buy this house. It's been 20 years that I've had it on the market. No one can buy it because he's got all these restrictions. But anyway, circle back. The reason the whole thing didn't work was because there was too much of a gray area about whether that is a security or not, right? And if you want to do this without tokenizing in crypto, you got to go do a Reg A offering with the SEC. Takes a lot of time, and then you sell shares, and you've got all sorts of restrictions. Or you tokenize, you create an NFT. And we built this whole thing, and we went out there and we started talking to people who had assets, and we said, would you tokenize your assets so your fan base can buy a portion of it? And everyone's like, I ain't going to be the first one to get the call from the SEC. And the whole thing went to shit, and we shut it down. And so that's my story about tokenization. So it's a great idea. I love it. Maybe under the new administration, people won't go to jail for this stuff, but 4 years ago, it was way too risky to do it.
Yeah, I'm a big proponent of not going to jail. Okay, sir, you had a question over here?
So
How investable do you think are the use cases around the solutions to the name, image, and likeness problems?
Actually, that is a really good segue. I was going to ask that question anyway. So go ahead, guys.
You know, our view is that like any fledgling, you know, industry, there's a lot of opportunity. There's a lot of money. It's a little bit of the Wild West, and we kind of haven't decided where we're going to place a bet. There's a lot of platforms, and there's nothing really proprietary about all of them, right? So I think at this time, there's not maybe going to be a Facebook platform level of like, you know, total dominance where this is where you have to go to do all your NIL work. We looked at a lot of them, and we realized that, you know, it doesn't really stop any of these athletes or any of these schools or any of these brands from being on all of them. Why would we pick one and kind of choose a horse in this race? So our opinion right now is to kind of wait and see, and whatever we give up on kind of getting in early, we're going to de-risk ourselves by kind of seeing how the dust settles. But
So I want to see if Vasu or Stephen, you guys haven't answered this question, because I have a variation of which that is very self-serving, but I like it. So it's up to you guys. Answer the questions given or take the mystery one.
Well, I'll say I asked Vasu the same question backstage, and it really was, you know, brought about from the fact that, you know, I've been hearing numbers that are thrown around in college tennis, which literally no one cares about. And they're, you know, pretty staggering for me, you know, multiple six figures for people that, you know, will never be, you know, have a future career as a professional or anything more than just playing for the university, which is amazing. But like, it's tennis, you know, it's not football, basketball, baseball, you know, one of the revenue generating sports. And so, you know, I just think that this is, I think whatever's being reported is just the tip of the iceberg, and it's going to, you know, flow down to cross country and swimming. And, you know, you can think about Olympic sports that are actually producing Olympians, you know, in the next handful of years. And I just think it's a really interesting space. But, you know, as we talked about,
Actually, I have a side comment. I'm good friends with a guy named Don Petrine down in Miami. He's good friends. He was Mary Jo Fernandez's teacher many years ago.
Yeah.
Her husband is an agent, and he allegedly has the in line to getting all these people hooked up with all of their, you know, sponsorships that they get. Because in women's tennis, you make far more money from sponsorships than you make from prize money, right? Yeah. And so maybe that's something you do with NIL, is you just hook up these prodigies who may never be great with NIL sponsorships, because you're playing tennis for 4 years in college, right?
Yeah, no, I'm yes, but I'm using, I mean, as an example, I'm just saying that even, you know, sports that are not, you know, I would say very visible are getting capital as well injected into them versus, you know, obviously the Michigan story that I think was the intro over here, where there's, you know, 10 million for a 12 million for a quarterback. So,
and feel free to share any thoughts on high school students in NIL. If you haven't.
Well, actually, to be honest, I do. I think that there is a potential. I mean, for these guys, it's more their realm than mine. But I would say that, you know, look, like the cost of junior sports is going way up, and like there's competitive elements of, you know, what it takes to be on a travel baseball team, what it takes to, you know, learn and play professional golf or tennis or whatever it may be. You know, and it's a burden that families are going to have to bear. And, you know, there's more of a light at the end of the tunnel to get those, you know, resources back than just a college scholarship now. So I think that, you know, there's potentially these years between, you know, whatever 14 and 18 years old where families are going through this time period where they're you know, shelling out huge amounts of cash to make their kids good enough to be a college athlete. And now, hopefully, there's a return on their investment, not only in the form of scholarship, but NIL money, as for people far smarter than me that can potentially figure that out or invest in it. But I do think that that's something that, you know, potentially could be there as well.
So Marty, I know we're pressed for time, so I'm going to ask one more substantive question and then one less substantive question. And it's about the topic that we're talking about. And I'll give it to you first, Devin. So NIL isn't really an investment by the donors or the collectives that make it. It's more so a donation at that point, right? Because there's no expectation of a return. So the first question is that sustainable? And the second part to that question is, Mark Lazary this week or last week revealed that he was in talks with Florida State about buying a chunk of the commercial rights for that athletic program. Is that the future to make it sustainable?
So sorry, remind me on the first question for.
So the first question just generally is the current piece of NIL dollars sustainable?
Collectives and all.
Yeah,
that.
Exactly, for schools and their ecosystems.
You know, it's interesting. This has always existed. So the boosters have been around forever. And it's always been interesting to me is that what are these guys and gals getting out of this? You know, cachet? Are they on the sidelines or whatever? We actually, there's a business that just been started up. These great guys over at Will Ventures have invested in it, where these collectives and individuals, you can basically chip in and say, I want to put my dollars towards recruiting the high school quarterback to come to my alma mater. And if he chooses not my school, then I get my money back. But if he chooses, then at least I know that as someone who's part of the collective or an individual, an alumni or whatever, my dollars are now, getting a better recruit, improving the football team. If you look at Alabama, over the past 15, 20 years, they've transformed that school through the football program, right? There's a better chemistry lab at the University of Alabama now, not because they studied, chemistry better than anyone else, but it's because the football program has gotten better recruits and it's a money machine. And if you can pull that all the way back to alumni, and there's an actual mechanism where there's more measurability around, okay, now the dollars are actually getting, improvements in this money-making machine within the schools, that makes it more real. And I think there will be a lot more investment in that space. So that's kind of what I'd say there. On the piece on investing into colleges, former college athletes up here, it's just such a different dynamic. It's so alien to us to think that, one, I don't like my coach, so I'm not just going to work hard. I'll just switch schools, and I don't need to sit out a year. Or that someone's going to pay me to play the sport I love at such a young age where I'm not going to be a pro in it. It's again, Wild West. There's a bit of pageantry and tradition, I think, that kind of falls away from it, which is I kind of lament. Do we want to see, the corporatization, if you will, of dollars coming in and owning a piece of these schools and owning a piece of these conferences? You're seeing beginnings of it with the Big Ten. I think it's Redbird Capital that just kind of invested in some, revenue sharing opportunity. Details were a little scant, but obviously there's dollars that want to come in. It's just making it a business more than it is
How is
student
that
athletes.
different than naming an endowment chair or a school of business or anything that these universities do? There's the Wharton School of Business, there's the whatever, it's just school. And I mean, how is that different? There's no difference.
I think it was
Florida State athletic team.
Yeah, no, that's not directionally incorrect, I don't think. I think maybe before it was more opaque in that, hey, I'm donating a library and then you're going to do these things for me. Or now I'm putting my name on the stadium and there's other things. And maybe the direction you're going is removing that opacity is maybe a good thing. And now you know where the dollars are coming from and where they're going and all that. So I think it's yet to be seen. I don't really have a comment on whether it's good or bad. It's just different. So we'll see. We'll follow the money.
But you can have performance in NIL contracts.
Yeah, but that performance is usually like predicated upon, you show up at a thing, you sign some autographs, etc. It's not necessarily, hey, you have to throw for 20 touchdowns or something like that.
I'm just saying that you have different levels of NIL because you've got these alumni oriented NIL programs, and then you've got actual real world sponsorships that are NIL.
Yeah, fair enough. It's all serving the same sort of goal at the end of the day, usually. Do you guys at the end of the dais here have anything else to add on this? Otherwise, I'm gonna ask my last question and get the hell out of here.
I think you covered everything that I would.
Okay, so cool. So this is gonna be self-serving for you guys, which is, and we'll go Devin to Stephen. What's the most exciting thing you guys are working on right now?
That's a great question. I think probably the most exciting thing we're looking at right now is the athletes' income streams as an asset class. So we're looking at a business that is working with professional baseball players to start, where they are going in through, their algorithms and deep data sets saying, you 10 baseball players are a similar profile in terms of the trajectory of where you're going from an on-field earning basis, okay? You're going to willingly jump into a pool. You will chip in a percentage of your future earnings into the pool, mitigating the risk of failure. Because what we don't hear about, we hear a lot about the $700 million man, right? What we don't hear about are the myriad of athletes that they dedicate their whole lives to this. They break their arm, they don't pan out, whatever happens, and they don't have anything. They don't have, they can hit a ball really far, but they can't run a business, and they're kind of, in a tougher position. I love this space because it is helping support athletes support themselves. It's not predatory because the money basically recycles around other athletes. They opt into pools together, and you're educating them on financial security and how to, there's a lot of derivative industries that can come from that. So we really like that. And the one note I guess I would leave on is that we like betting on things that are betting on sports. We won't say that we won't come into a specific team within a specific league, within a specific region. But for example, going back to Unrivaled, what we like is women's basketball. What we like is star-driven leagues. What we like is that there's new ways of consuming that property, and sports will ride all those tides together. So in here, we think there's a real future in athlete income pooling, and we think this company is going to be the leader in it.
Other than stuff that we've already talked about, I'd say we're thinking about new financial instruments outside of just pure venture investing, right? So there's private credit opportunities for sports books and fantasy guys, people who can't get lines of credit from regular banks because they just won't give them the money given that they're gambling organizations. So being able to provide them with lines that they could use for user acquisition. We're also thinking about a collectibles fund that wouldn't just be acquiring collectibles directly, but essentially creating a financial instrument for people who want exposure to the collectibles asset class. So thinking beyond ventures, try to build hopefully a platform that survives long beyond us, because we fundamentally believe that sports was here before we were born, and sports will be here 100 years after we're gone. It's the one thing that AI is destroying everything else. Sports will not be touched, because at the end of the day, it's the one thing that you're still going to need humans on the field for. I mean, we could argue about whether putting robots on a court would be interesting for anyone to watch, but I hope that at least that's where we draw the line as humanity and say that sports is the one thing that we will leave to show the pinnacle of human performance. And so I'd like to build a firm that lives well beyond me.
That's awesome. And I agree completely. Sports are, look, I think that's what we love about them. They're the ultimate in meritocracy, and, something that hopefully brings our best competitive juices out. For me, it's really about building the emerging league of WTT, and something that waking up every day to build a brand, but really leveraging technology to be a key part of it. I think that, as I mentioned, the key revenue streams that we believe are going to be core to all these emerging leagues are going to be through tech, and or at least that's what I think. And so, working on the AI, working on, how we integrate to new media, to gaming, to gambling, to everything that is going to be a key part of it is what I'm doing. Thanks.
Awesome. Well, thank you.
Where are you guys all based? What city?
Charleston, South Carolina. Here.
Best place in the world.
I'm here. I'm here.
You're in New York?
I'm here as well.
Okay, great, perfect.
Well, give it up for these guys. Thank you, Marty. Appreciate it.